So we're up to the liabilities section of the balance sheet, and you all know what liabilities are. They're really obligations that that the company owes to others, but we add a lot more detail to that at this level. So they're probable sacrifices of economic benefits arising from present obligations. Okay, probable. If you have an accounts payable, you have a legitimate bill you're going to pay, you write the check, and that's a well-known current liability. But probable sacrifices, they refer to things that haven't, you're not quite sure of the amount or the timing or anything else, but it's probable you're going to have to pay it. And those get recorded as liabilities on our books, just like our accounts payable would. So if you run the corner store and someone has just slipped on a pool of water and has just left for the hospital, chances are you're going to have to pay something there at some point. So if it is probable and you can estimate the amount, then that gets booked as a liability on the books. So probable sacrifices of economic benefits arising from present obligations of an entity to transfer assets, okay, that's write the check, or provide services. This is your unearned revenue situation where you have received cash in advance for work that has not been done yet. So you owe the work, okay? So that's to transfer assets or provide services, do the work. Let's see, to other entities in the future as a result of past transactions or events. Okay, the event would be they slipped on the water, okay? Something like that. Now, we're going to classify them as current or non-current, and again, this gets a little bit more complicated than you did in AC 102. So, usually you'd say, we'll classify as current liabilities anything that we expect to pay within the next year or the operating cycle, whichever is longer. And I stress that usually in this course we do not run into the or longer. It's usually within a year. So when you're going to classify something as current, it has to meet that criteria where we're going to pay it within the year, but it also it has to use current assets to settle it. In other words, if you expect to refinance a payable using long-term assets or long-term liabilities, then that would get reported as non-current, not current. So part of the definition now becomes, are we going to use up current assets to meet this obligation? And if we're not going to use any current cash or set up another short-term financing for it, then we cannot classify that as a current liability. So that's just sort of adds another layer to the definition. Let's see, you also have to be aware that some of the accounts, your current liabilities can be trade or non-trade, just to keep that terminology in mind. Okay, so that's our current liabilities, long-term liabilities. These the company doesn't expect to satisfy within the year of the operating cycle. These would be our bonds payable, our long-term notes payable. Those are the ones that we get into in this course. Mercifully, we do not get into deferred income taxes or leases or pensions, which are very complicated. There you go on to UMass or Northeastern or wherever. So anyway, the company is not going to pay these within the next year or so. The different types of long-term liabilities, they break them down into how they arise. So they can arise out of financing activities. So issuing bonds payable, long-term leases, long-term notes payable, those would be all financing operations. And then they can arise from regular operations. You have pension obligations as a result of your employees doing their work, deferred income taxes. And then there's all the contingent ones, warranty obligations and premium obligations and various other contingent liabilities, as long as they're going to be in the long term. So we can classify an item as long-term or non-current liability if we are not going to use current assets to settle it or pay it off. So we're not going to make current liabilities, we're not going to use current cash to pay it off, then it can be classified as non-current. Lots of disclosure that we get into a little bit later as far as any restrictions or securities pledged or anything like that on our liabilities. Okay, so that's our basic liabilities category, and we'll move on to our owner's equity.